So Mark Selby, you're back. How are you?
I'm great, sir. Good to see you back from holiday. Looking very tanned and rested. So good to see.
I'm very tanned and rested. Like a Greek god, Mark. Like a Greek god.
There we are.
As my son says, Fatius, the Greek god. That's what I want. Yeah, no, it was a good trip. It was a good trip. Hey, and how have you been? We're actually going to talk quite soon about Canada nickel and what's going on there. So I'm excited, looking forward to that one because I want to see what catch up on that one. But our usual, the nickel market. Why don't you give us a sort of a quick overview about nickel market prices, what it's being influenced by? Because there's a big new news story of the week with BHP that I really want to talk to you about.
Yeah, no, for sure. So quick and dirty here. Nickel prices have stayed in an $8.59 a pound range. Again, Tsingshan up to its tricks. At the earlier part of that 2-week period, stainless prices were really starting to rip higher in China, and Tsingshan unilaterally announced about 5% price cut to try and take some steam out of the market. Again, did that, but again, I think really showing where nickel's resilience is. It came back, has traded back up into the range pretty well. So, I think it's going to set the stage for an exciting fall. Ore stocks are still declining when they should be increasing. We're seeing all of the, prices in the supply chain, premiums in the supply chain, all headed in the right direction. And, most of the metal stocks, developer stocks have sold off a good 25-30% over the last 6 weeks on COVID. So I think it's setting up for, this is one of those times where you could and should step into the market to set yourself up for some serious gains, over the next 6 to 9 months.
So, okay. So, and I think what we're going to try and do is do this as a new format. So Mark's going to give us a little quick summary. There's a slightly more detailed notes, which you can look at below. Go and check those out and see what the variables are, which are, affecting those things. So right now, I think it's safe to say some of the momentum's come out of the market. We've got a lot of the nickel stocks have been hit 25 to 50%. It's not looking pretty out there, is it?
No. Oh, no. Our stocks got whacked along with everybody. I mean, literally, Talon, First Point, a lot of the other key TSX developer stories, they're all off 25 to 30% in a 2-3 week period. And meantime, the nickel fundamental, have just continued to remain solid, improve during that time frame. So again, way back, I talked about the end of the year, early next year being the real catalyst time frame, and we were kind of ahead of ourselves. Again, even the top analysts, who are at the bullish end of nickel demand, which again, we're looking like, 16, 18% increase year over year, which is above the 15% I was calling for. And I was way out in front of everybody else. Again, they're way under for next year. EV demand's up 100% in most markets. And so typically what happens if stainless has one of these massive double-digit growth years is the next year can be 0 to negative as people kind of get ahead of themselves. But even if you assume stainless is 0, EV demand, if it goes up another 50 to 100%, that just by itself moves nickel demand for the overall market by 5 to 10%, because that's the piece I was waiting for, is the EV chunk of demand to be large enough to start having an impact on the overall market, which is where we'll be, at the end of the year. So, I think this selling opportunity just is a no-brainer time to step into the market, and you'll be quite happy 9 to 12 months from now.
Yeah, again, there's some information there with regards to what's happening in China, EV and Europe too. So take a look at that. I want to get to this story real quick, because I don't think people understand the importance of this, which is that BHP are moving out of oil and gas. They've just offloaded their oil and gas projects they've got, and they're also getting out of coal, and they're moving out of lots of things which are non-EV related, because they want to, and they see the future in copper, nickel, and a bit of potash too, don't they? So what was your take on that story?
Yeah, no, this is the thing that I think, it's a single decision. It's a 2-page news release, but these are the real signals that you're going to see. This is a fundamental asset portfolio change by the largest mining company in the world. And so, these types of things are things that boards spend, multiple meetings, and lots of consultants to come up with, this is absolutely what we need to do. So there's BHP is selling off the oil and gas business. They've are going to spend nearly $6 billion US for the first phase of a potash mine that will have additional phases. They've already spent about $3 of that on the project, so it's another $3 billion of spending. And again, they reinforce they have three future-facing metals: copper, nickel, and potash. And so again, if BHP's thinking this way, is that we want to future, really start to shift our entire portfolio onto more of those metals and less of the others, then every other company is going to be thinking that way. So again, if you haven't bought a lot of nickel stocks, if you haven't bought, most people are generally always loaded up on copper, but maybe not as much as they should be on nickel. And again, there's not a long list of great potash opportunities out there earlier. It's like, the majors are telling you they want to shift their business, for the next 10 to 15 years, and the others are going to follow them along. And then the massive wild card in this, a year ago, March at PDAC, before the pandemic exploded, I was sitting with a bunch of people from McKinsey, and they said the conversations in the oil and gas boardrooms are really, for the first time, they're starting to get serious about, okay, a lot of them talked about being energy companies and not oil and gas companies, but the reality was 95% of their revenue was oil and gas. And so they're now really starting to get serious about being an energy company. And, if they can get their head around energy metals as, again, because, oil powered cars, now it's going to be nickel, cobalt, lithium that are going to be powering cars. So if they can get their head around that, again, they're a whole league bigger than BHP. And so, that's where things get really exciting. If just one of those, mid-tier oil and gas, large oil and gas companies makes that first step, again, it's the cows, the one cow heading to the barn, and the whole herd of cows is going to follow pretty quickly. So, I would say, use this BHP announcement as one of the cows is just starting to head for the barn. And you want to make sure that you're in position for when the rest of the herd comes charging through the gate. So
yeah, I think for sure, once one of these big guys goes, that more will follow, because those conversations, they'll all be talking about the same thing. And obviously, it just happens that BHP's gone first on this one. And we've seen a few small deals happen. I mean, we've talked about Honeywell and Norilsk and Noront more recently as well. So it was always there. But what does this recent sort of downturn in the nickel equities do for retail? I mean, they're going to be slightly confused. These are mixed messages going on.
Yeah, I've got another set of real world examples where you get these disconnects in both directions between commodity prices and equity prices. And again, it creates the chances to really make outsized returns in a 12 to 18 month period. So we at Inco we're going to merge with Falconbridge in 2005. By the end of 2005, nickel prices had collapsed. And again, it was just short-term gap opened up. And again, nickel prices, if you had bought at that time, they then went on a five-fold run from the end of 2005 until mid 2007. So it was a great commodity opportunity. And then what happened, the commodity price starts ripping back up through 2006. 2006 commodity prices, I think in May 2006, nickel prices were already, I think, had more than doubled or nearly tripled by that point. But the equity prices had come off. Again, it was a classic sell in May and go away situation. And so it was tough for us because our equity bid it was falling away in value versus the cash bid. And again, those equity, share prices dropped 30-40%. In a very short span of time. Again, at that point in time, between that May and a year and a half, when the final bids came in, you were looked at a 3 to 4x. And again, with no commodity risk, the fundamentals were screaming at that point in time. And, there was no, it was one of those great opportunities. And right now, is one of those opportunities, unless Delta kicks into, or we get a new variant. The fundamentals in the nickel market right now are just really, really robust. And again, analysts are once again underestimating demand. Yes, there's lots of supply coming from Indonesia in the next year, but we're going to have another probably 10% growth in nickel demand next year. So and there's not that supply is not coming.
Okay, so let me just understand this, okay? Because when gold company CEOs come on here and tell me that, don't worry, gold's going to recover, it's all going to be okay, it's fine. There's the fundamentals are different, and the rules have changed, I think, in precious metals as well. It used to be, a harbor of safety for your capital, but I'm not sure that works anymore because there's too many things which are affecting it. But for battery metal companies, I really want to understand that you're not just coming on here and saying, "Oh, opportunity to buy in the dip," take advantage of the situation. I want to say this move by BHP and probably others coming over the next few months, it's a big deal. It's a big sign. Yes, we talk every week about what's happening in China, Indonesia, and Philippines in terms of supply and demand. But why should people believe you and say, "Hey, the prices have come off, but they're for all the wrong reasons. It's come off for all the wrong reasons. This is a genuine opportunity that you can take advantage of." Do you believe it is?
Yeah. Oh, no. Fundamentally, yes. And again, it's because it's a decision around their fundamental portfolio mix. And so again, at a large company, you've got individual asset decisions or whatever, but the big one, the one that companies spend a lot of time are the most important decisions. And again, would have been 12 months in the making, are these asset portfolio these portfolio level decisions. And so, this was a clear sign. Not only did they sell oil and gas, but, we're going to dump a big chunk of cash, into the potash business. And, as you said, we've already seen on the nickel space, they bought Honeymoon Well a year and a half ago for $100 million, which is the last low grade sulphide in Australia that they didn't already own. They just dropped $300 million on Noront to pick up a higher grade nickel sulphide exploration opportunity in Canada. And they announced a bunch of expansion plans at their existing low grade sulphide operations in Australia. And so, those are three additional steps. And, if they're dropping $3 billion in potash and they want nickel to be as important as the other metals, there's more capital coming. And, again, I cannot underscore it enough. The big resource companies are not that individualistic or, that distinguishable. If you see one of them thinking this way, the others are not going to be far behind. And so, the biggest cow in the herd has just gone charging through the gate, heading back to the barn. And so, when you get a massive transformation in an industry, it does not happen in a straight line. You get these, big bumps and sell-offs and bump and sell off. And so, this current pause in the market, where we've seen stuff come off, most of the nickel stocks are off 50% from their highs in February. These are the times to add to your position or establish positions if you haven't already, because, again, the next leg up is going to be, even more dramatic than the previous leg that we've seen before.
So how do small equity companies play this? Because obviously, if someone comes in and has a look at you, has a little sniff around, whether it's a BHP or others, you've got to try and work out what's best for your shareholders. I get it, and I'm going to get it from you. But if we can just keep it more broad than that, is how in a situation like this where stocks have come off 50%, do you defend yourself? Because in any normal company go, well, do you know what? Now's a good time to start going and buying stuff up, or is this just so temporary as to be inconsequential and next week's a different week?
Yeah, no, I think the key thing for any company in this position, and this has really been part of what's driving our behavior is again, mining companies are conservative by nature. They will drag out a decision as long as necessary. And so you as a mining company, what you need to be doing is actively advancing your project so that if that mining company waits another 6 months, it's very clear to them that you've de-risked it another step further, and the price tag by the time they step up is going to get that much more expensive. And again, Noront, BHP's move on Noront is a classic example of that. They could have bought it for a quarter of the price 18 months earlier. And then they only moved when a private company, Wailu, controlled by Andrew Forrest from Fortescue, made the first move, and they realized, oh shit, this is, we're gonna, one of the key assets in Canada that we're coming to Canada with our nickel exploration team is already going to be off the table. And so, that's been a key driver for us, is just moving that ball down as quickly as possible, and basically forcing their hand to step up, and making sure that we make our market cap as high as possible all the time, to make it as expensive for them as possible for that future takeout.
The timing on I sorry, there's a bit of more of a broad conversation on specifically nickel, but for companies who are coming and thinking of an acquisition, they've got to get into one. You've got to create a data room for them. That takes a little bit of time. Then they got to spend a little bit of time working out if your information is everything that they need. And if it's not, they then need your permission to go and maybe spend some money to work out how do they fill in the gaps. So it all just takes a long time to do. I mean, with Noront, in terms of what was the situation there? Had they already got access to the data?
You know what? To be honest, I don't know. I can see if I find out. But my sense of the transaction was, no, they only really sort of stepped up and reacted post. Now, maybe their nickel exploration group had looked at it in the past, but no, they kind of came in over the top and really only got going once Wailu was there. So
interesting.
It's and again, you need, as you said, there's a pile of preparation that you need to do to be ready for those incoming inquiries, and so that's something, again, that's been a focus we have in place, and we made one of our press releases in terms of discussions with strategic investors, and those are going on right now with Canada Nickel. The other one is this is where it did the differentiation is between different juniors, and ones you should focus on for a takeout versus not is, again, if you've used promotional engineers who come up with numbers that have no bearing in reality, versus using highly credible engineers who provide capital costs and operating costs that people say, yeah, those numbers make sense. And so again, A, it's the right thing to do for us, but B, again, in terms of having a major come in and pay a major big price, for the assets, an asset that you have, having a credible set of engineering firms doing the work on it just makes it, again, makes their job easier, because it's not just them coming up with the numbers. They've got engineers who they see and think are, quote, good engineers, who've come up with those estimates. It's
really interesting. I was speaking to someone 2 days ago, and I won't say who or which company, but you can use that phase to either as some kind of defense to an acquisition, because whatever you say, like, some CEOs go, I think that I can genuinely create more value. I just need another year of this thing. But if an offer comes in, you got to respect your shareholders and say, okay, Will, here's all the information you need, and yeah, you can buy us on the cheap, as far as I'm concerned, because I can't persuade my shareholders otherwise. They want to cash in now, whatever the premium is to today's price. And I've seen, I've seen that situation. The CEO is like pretty pissed, because he's like, "Jesus Christ, we had a real opportunity to double or treble the price we could have got. We just needed to spend X number of money drilling holes, and we would have got there. I'm pretty sure, as sure as you can be. But the shareholders wanted the money now, and that's fine. And I've seen other CEOs, as you describe, in the situation where you go, they have nothing. It's all smoke and mirrors. It's a nightmare. They know it's a nightmare, and as soon as someone big walks in, it takes a couple of months to actually work that out. It takes real quick to work out what is and is not real. And they generally walk away. And that's when people will say to me, oh, Rio Tinto's in there. We've got Rio Tinto in the data room. We've got, whoever. And it's like, it means nothing. Or they've taken an option for a year to sort of see what they can do. It means nothing, because I think 19 times out of 20, they walk. They just do. But this is the interesting one. I've also seen CEOs who don't want to sell put the information together badly, like not present the information the way the prospective buyer would like, or there's a lot of information missing, and this whole chase, they kind of prolong the process, which buys them time to actually keep driving up the price. I've seen it as a kind of, using that moment, that mechanism to actually delay things. I thought it's kind of interesting, which is a bit naughty.
Yeah. No. I mean, at the end of the day, when you get an offer, that's 50 to 100% higher than your current share price, it's, you have to, take that to your shareholders. It's kind of tough to say not to, but again, where again, and these are the signs you need to look for with specific companies, because there's kind of two sources of bad CEO behavior that you need to avoid. Again, if you're buying a company with an asset you think that will ultimately get acquired, and so one of them is the it's my baby CEO, and so these are people who are attached to their project, and I'm never going to sell it, or they have to pay 5 times my share price before I even think about an offer, and that's just not
realistic.
And again, they are out there, and so you have to watch for the signs of those guys who are pretty attached to their project, and no one can do it better than they can, which is not correct. The second piece is a lifestyle CEOs. So again, we've talked at length about bad promotional companies that really don't have anything, and they're just reworking something that's been around for a very long time. The almost worst thing that happens is if they accidentally find something, or their metal's really hot, so they go from a $40 to $50 million company to a $400 to $500 million company, and they're like, this is great. We can, I can raise 10 years worth of salary with this company, and just sit here and tread water, and we'll keep doing enough work from here, but I've just guaranteed myself 10 years of a great paycheck, and cash, and I'll go try and create a few more new promotes. And again, the tough part there is, again, they don't want to get bought out. They've got this little cash cow here that they're running, and personally for them, they really have no interest in seeing a bid emerge. And so again, they would sometimes use tactics like that. I just want to sort of delay it, slow it, not really engage with anybody, not really advance it too quickly, because I don't want to get it over a goal line where somebody might actually make a bid. So those are two sets of behaviors to really watch out for. With companies that you own.
I've interviewed one of those recently. 14 years, 15 years at it, and nothing. Not even a discovery. But the money keeps rolling in, because there's always the greater fool, isn't it? There we go. The warning signs are there. Okay, big message for the week in nickel is buying opportunity. Prices have come off for all the wrong reasons. Will recover the demand. Fundamentals say they gotta.
Yeah, no, it's again, you've got these disconnects that open up between the commodity fundamentals and the equity fundamentals, and where we are right now is one of those great opportunities. So yeah,
right. And we've mentioned a few names. So just to be clear, we've mentioned a few names in the past few weeks and months of some equities, which nickel equities, which are good. We don't tend to mention the bad ones too often. If we do, we label them as such. So have a look back, have a think about who you should go to. Any recommendations, Mark? Any thoughts? Which company?
Oh, in terms of obviously Canada Nickel would be one of those. But no, I think you can see there's good, like First Point's doing a great job advancing their project. They've got a great big resource that's there. Talon, again, good resource, tough jurisdiction, but that's one of the few high grade nickel discoveries that are out there. Again, if you want an option call, Orford's optioned out their nickel property to Wyloo, who's the group, the Andrew Forrest's group, and so they're going to be doing giving that property the amount of exploration that it needs, given the remote location. So I think that's a sleeper at the current valuations. That makes sense. And then you've got the Aussie stories in terms of Poseidon, who continues to make some pretty exciting high grade discoveries that are there. So that's just a handful. Again, I said there's other names we've talked about in the past. But
brilliant, Mark. Thanks very much. Good to see you. You're going to go missing in action over the next couple of weeks as well, aren't you? Going to get some
exactly. Yeah. So I'll be back in September.
Yeah,
so
beautiful.
Going to take a little downtime.
Good man.